Hello everyone, welcome to Elliottwave.com YouTube channel. Today is November 28 and the chart of the day for today is the QQQ. This is the Nasdaq ETF. Now we can see it's a little bit of a tricky outlook here, guys, and the reason is because if I only look at the QQQ without looking at the entire market, then I think it makes sense. What I'm explaining here, it makes sense. But then when I start to look at the entire market and start considering other US indices like the Dow, ES, Russell, then it starts to be, you can start to see contradiction. Okay, now let's take a look at the shorter cycle of QQQ, 45 minutes time frame. So what can we see here? Now what I see here is what looks like a clean 5 waves down here. So you got a clear extension on the third leg, which is typically the characteristic of a wave 3 of an impulsive structure, right? So you got this extension, and then you got a what looks like a clean 5 swing down from the peak 516, right? And then once it completed this 5 swing down with a clear extension on the third leg, you got a rally here which is not looking impulsive, right? Because that is the characteristic of a corrective structure here. You have a lot of overlapping pattern sideways zigzagging like this, right? No extension whatsoever. You got only 3 waves and then pullback, and then another 3 waves, another pullback. And in fact, if you measure the extension of this WX, you got QQQ turning lower from the area where you would have expected it turns lower if this is a corrective rally, which is the 100% extension area. If this would have been an impulse or a bullish market, you would have expected extension on the third leg, 1.618 extension followed by a 4 and a 5, but it didn't happen. Okay, and in fact it reacted lower every single time it reaches the 100%, and the last rally here also reacted lower precisely from the 100%. So overall, if you combine the two information, you got what looks like a 5 swing down, you got what looks like a corrective rally. Then the conclusion is it seems like it is more likely to extend lower and break below this low again, as long as we don't break above 516. So far so good if you ignore everything else. Now the problem is that when you start looking at the Russell, ES and the Dow, that's when things get a bit complex, because the Russell, the Dow, ES, they still are nearing the all-time high, and in fact they still make a new all-time high. Okay, so it's very hard for anybody to pick the top in the Dow, in the Russell, and of course you're gonna keep opening up more upside until you see some evidence that they have topped out, right? So it's kind of hard to see how the Nasdaq by itself can start to go down while the Russell still makes new high, or the Russell still continue to find support and continues to extend higher, and ES also starts to continue to extend higher, right? It's kind of a little bit hard to think the Nasdaq by itself is just going to go down and the rest of the US indices still continue to find support, continues to extend higher. So something needs to give up here, right? So either the Nasdaq somehow the structure here, even though it is quite convincing, it can see more downside, but it could fail and eventually breaks to new high. So either QQQ, it's kind of like a false structure and breaks higher, right? Or the other indices, ES, Russell, and so on, would need to top out very fast and start to see bigger pullback. Now, so that's the contradiction that we see so far, right? So if looking at QQQ without considering anything else, then yes, I think more likely we can see more downside below 516. But if considering everything else, this is kind of risky. It is risky to speculate we can see more downside, and the reason is simple, because Russell, Dow, they are still making new high, and therefore it's hard to think that they should find a top and starts to pull back without seeing evidence that they will see a bigger pullback. Okay guys, so again, some contradictions here. So I would suggest to be quite careful overall in the market. It's not even definitely bullish, and it's not definitely bearish, so it can get quite choppy, I think, overall in the market right now. So if you want to get more updates on QQQ or any other ETF, indices, Forex, commodities, feel free to check our service. We have 14 days trial, and the link is in the description of the video. So I think to conclude, guys, I think with the contradiction, what is the best way to do is actually not to try to sell. And what the best way to do is to continue to look to buy in the dips, but always at the extreme area. So what does that mean? That means assuming QQQ can really go down, and that is assuming, right? If we can really go down, then we should expect support at the ABC 100% extension. So instead of looking to sell, because it is there is a contradiction with the other indices, then it will always be better to continue to be bullish, right? And looking for support every single time at the next extreme area. So in this case, the extreme area is the ABC 100% extension, which is 489 and 475. So this should find support from here, assuming it can go down, and from here we can get to a new high, or we can rally in 3 ways. Okay, so I'll see you all again next time. Have a nice day, everyone.